What if I told you that the app on your phone that started as a simple student loan refinance tool has quietly become a full-blown financial empire, serving over 11 million users and raking in billions in revenue? Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. Today, we're diving deep into SoFi Technologies, Inc., the fintech disruptor that's challenging traditional banks with everything from loans to crypto trading. We'll break down its core business lines, explore the latest products and innovations powering its 2025 surge, and see how it's positioning itself for explosive growth. Whether you're an investor eyeing SoFi stock, a young professional building your financial life, or just curious about the future of money, this is your ultimate guide. Stick around, because SoFi isn't just an app. It's the one-stop shop rewriting how we borrow, save, and invest. Let me take you back to 2019. I was drowning in student loans after grad school, juggling payments that felt like a second rent. Then a friend mentioned SoFi: easy refinancing, no fees, and perks like career coaching. I refinanced $50,000 and slashed my interest rate by 3%. Fast forward to 2025, and SoFi's Q2 revenue hit a record $855 million, up 44% year over year, with net income soaring to $97 million. That turnaround hooked me as an investor, and digging deeper revealed a company blending banking, investing, and tech innovation to serve millennials and Gen Z. If you've ever wondered how SoFi makes its money or what's next in its fintech playbook, let's unpack it all, from its revenue engines to the cutting-edge tools launching this year. What is SoFi Technologies? At its core, SoFi Technologies Incorporated is a digital financial services platform founded in 2011 to help students refinance loans amid the 2008 financial crisis. It went public in 2021 by a SPAC merger and has since evolved into a comprehensive one-stop shop for borrowing, saving, spending, investing, and protecting money. Traded on NASDAQ with a market cap around $25 billion in October 2025, SoFi's mission is to help people achieve financial independence, meaning your money works for the life you want, not just survival. In practice, it's a fintech powerhouse generating massive growth. Q2 adjusted net revenue reached $858 million, up 44%, with adjusted EBITDA at $249 million, up 81%. Fee-based revenue hit a record $378 million, up 72%, driven by everything from interchange fees to loan originations. With 11.7 million members, up 34% year over year, and 17.1 million products in use, up 34%, SoFi's ecosystem touches over 160 million global accounts via its tech platforms. Headquartered in San Francisco with over 4,000 employees, it's not just competing with banks like Chase, it's redefining them for a digital native generation. Core business lines. To understand SoFi's momentum, let's break down its three key segments based on Q2 2025 financials, where total revenue hit $1.13 billion TTM, up 22.6%. These aren't siloed, they interconnect through SoFi's app, creating a flywheel of cross-selling and data-driven personalization. First, lending, the original powerhouse and still the largest segment, generating $413.4 million in Q1, up 25%, and driving much of the $8.8 billion in record Q2 originations. This includes personal loans, student loan refinancing, SoFi's Roots, home loans, and auto loans, SoFi's Roots. With enhanced tech for faster approvals, SoFi targets prime borrowers, high credit scores, for lower risk and better margins. In 2025, lending revenue benefits from a new personal loan product for prime credit card customers, boosting originations amid falling interest rates. It's about 48% of revenue with strong net interest margins from holding loans on the balance sheet. Next, financial services. The high-growth engine exploding to $303.1 million in Q2, up 66% year-over-year. This segment covers banking, SoFi checking and savings with 4.5% APY, investing, robo-advisors active trading, credit cards, cashback reward, and insurance. Deposits hit $27.3 billion in Q1, with 90% from direct deposit members, fueling low-cost funding. Monetization shines here. Annualized revenue per product is $88, up 48%, from fees like interchange, up with card spend and referrals. It's 35% of revenue now, with products like SoFi Relay, Personal Finance Tracker, and SoFi at Work employer benefits, driving cross-sell. Members average 1.5 products, but top users hit 5+. Finally, technology platform. The B2B backbone via Galileo and Technisys, generating $103.4 million in Q1, up 10%. Galileo powers 158.4 million global accounts for fintechs and banks, offering APIs for payments, cards, and compliance. Technisys adds cloud-native core banking. Recent deals like with Mercantil Banco in Panama expand internationally. It's 12% of revenue but scales with low marginal costs, enabling 5% account growth to 158 million. These lines feed each other. Lending data informs personalized financial services, while tech powers seamless experiences. Fee-based revenue, 67% growth to $315 million in Q1, underscores diversification beyond interest rates. New products and innovations in 2025. 2025 has been SoFi's breakout year for launches, fueled by accelerated R&D and AI integration. With 3 major product rollouts predicted, SoFi's focus is on deepening member engagement and B2B expansion. Highlights from first quarter to third quarter earnings and announcements. At the Q1 earnings call, SoFi doubled down on innovation, adding 2.7 million products in Q1 alone. Key updates include SoFi Invest enhancements, accelerated investments here yielded options, Level 1 rollout in October 2025, letting members trade covered calls and protective puts for risk-adjusted strategies, democratizing advanced tools for retail investors. Active trading volume surged 50%, with AI-powered robo-advisors now personalizing portfolios based on goals like retirement or home buying. Crypto and blockchain relaunch. In June 2025, SoFi relaunched crypto investing with expanded coins, BTC, ETH, and 20+ others, and staking rewards up to 5% APY. A partnership with Lightspark integrates blockchain for instant international remittances, cutting fees by 70% versus traditional wires, targeting SoFi's global tech clients. Personal loans and credit expansion. Q2 saw a new prime personal loan product for credit card refinancing, originating $8.8 billion total loans. SoFi Credit Card 2.0 adds dynamic cashback up to 5% on categories like travel, tied to spending AI insights. On the tech side, Galileo launched AI-driven fraud detection, reducing false positives by 40% for clients. Technisys Cyberbank went live in Panama, enabling digital banking for underserved markets. Upcoming, SoFi Travel 2.0 with AI itineraries and embedded insurance. These aren't gimmicks, they're ecosystem builders. For example, SoFi Relay now uses AI to track spending across linked accounts, suggesting autosaves for goals. With 850,000 new members in Q2, up 34%, innovation is fueling virality. The competition. SoFi doesn't play alone. In lending, it battles Upstart, AI underwriting, and Lending Club. But SoFi's prime focus yields lower defaults, 0.5% versus industry 2%. Financial services pitted against Chime, neobanks, and Robinhood investing, where SoFi's all-in-one app wins on convenience, Members use 1.46 products versus single app rivals. Tech platform competes with Plaid and Stripe, but Galileo's 160 million accounts give scale. Strengths: digital-first appeal to 25 to 34-year-olds, 70% of users, and cross-sell magic. Weaknesses: regulatory scrutiny, e.g., CFPB probes on lending, and rate sensitivity. Still, SoFi's 29% EBITDA margin, up from 15%, outpaces peers, positioning it as a fintech leader. Challenges and trade-offs. Growth isn't free. SoFi's CapEx hit $500 million in H1 2025 for AI and data centers, pressuring short-term margins. Debt to equity rose to 0.57 in Q2, signaling leverage risks if rates spike. Privacy concerns with data-heavy personalization and crypto volatility add hurdles. Users trade free tools for data sharing. Investors face fintech multiples, P/S at 8 times versus banks 2 times. But SoFi's $2.5 billion cash hoard and 18% net margins buffer it. Is it sustainable? Absolutely. SoFi's trajectory screams longevity. Q2's 44% revenue growth and raised 2025 guidance, $3.5 billion plus revenue point to $200 billion by 2030 at 20% CAGR. Analysts forecast $55 per share by 2030, double current $25, driven by 30% member growth. Regulations loom, but diversification, fees now 44% of revenue, and tech moat ensure resilience. Who is this for? SoFi's ecosystem fits all, from debt-burdened grads refinancing loans to busy pros, auto-saving via Relay. Investors, SoFi is a growth bet, up 105% YTD on profitability. Techies love Galileo. Families use at-work perks. I bought SoFi at $7 in 2022 for the innovation. Now at $25, it's compounding nicely. What's your take on SoFi in 2025? Excited for crypto relaunch or options trading? Drop thoughts below. Bullish on SoFi stock? Like if this helped, subscribe for more fintech deep dives and DYOR. Thanks for watching. Let's build that financial independence together.